Hey, thanks for making it to Veterans Info Tap. I'm glad you made it. 2024 eligibility requirements. Want to see what we are looking at when it comes to some of these benefits that you might not be using. Maybe you think that it's more cumbersome than it is, or maybe you don't think that it's advantageous. Let's jump into it here. I actually found a headline and an article that just came out October 4th, 2024, and I am sharing it with you here today. So let's jump into it. Hit the thumbs up, subscribe, share with a friend, all that good stuff. If you want to support the channel in other ways, consider being a member. You can do that by going to the homepage. You will see the highlighted members and a join button. Thank you so much to all you members. I really do truly appreciate your support. All right, so let's jump into it. The headline here is VA home loan requirements for 2024. Are you eligible? Now, I will say I have done a few videos with David Piatek, and he is, we'll call him a subject matter expert actually, in VA housing education. And in fact, that is actually the name of his YouTube channel as well. So VA Housing Education is that channel for David. And he is actually a lender, and you can reach out to him with any questions. I'll drop a link in this video as well. In the description of the video, you'll have his information. Don't feel any way about reaching out to him. He is welcome to take any of your questions. He welcomes them all. So let's read this though. Let's jump into it. Again, the headline, VA home loan requirements for 2024. Are you eligible? All right. So remember that a VA home loan could be cash out refinance, could be just a streamlined refinance, lowering your interest rate, could be the purchase of a new home, could be a purchase of a multi-unit home, buying a 2-unit, 3-unit, 4-unit property where you're going to rent out some of those. So there's a lot of options. There's more than that, but again, definitely questions for David. Let's jump this. All right. The U.S. Department of Veterans Affairs administers the VA loan program, which guarantees mortgages with competitive interest rates, no down payments or mortgage insurance, and accessible credit requirements to military service members and veterans. So you can use it when you're still in the military, right? You could still be active duty and utilize it, or you could be a veteran. Eligibility for these government-backed loans hinges largely on your service record, but the VA lenders consider your credit scores, debt-to-income ratio, and income. There are also VA home loan inspection requirements to meet. The property must be safe and structurally sound and pass a VA-specific appraisal. If you meet VA home loan requirements, you might prioritize this type of mortgage if you don't have the down payment saved for a conventional loan, which in order to get a conventional loan with no mortgage insurance, right, and just one loan, you need to put 20% down. So that's a lot of money. The VA home loan allows you to go higher than that, up to no money down, and you're not paying mortgage insurance, which is super good. All right, let's move on. If, let's see, for a conventional loan, you can get a lower APR, annual percentage rate, than you would on other programs, or have a low credit score, but a compensating factor such as high income. So what they're talking about there is you might have rough credit, but maybe you have an explanation, things have changed, now you're in a better situation. The VA home loan allows lenders to really consider that more so. Why? Because the VA is essentially backing that loan, taking some of the risk away from the lender, making it easier for them to lend you the money. They're not putting it all on the chopping block, if you know what I mean. So moving on, who can get a VA loan? VA loans are only available to military retirees, veterans, and active duty service members who are eligible for a Certificate of Eligibility, a COE. You can get that COE from the Department of Veterans Affairs. Your lender should also be able to get one for you. Some spouses are also eligible to claim the home loan benefit. To qualify, you must meet minimum service requirements, which depend on the date and duration of your service. So here they have a little table in here, and it says if you're a service member, you've served at least 90 continuous days. If you're a veteran, you served for between 90 days and 24 months. You served for your full period of service for which you were called to active duty, or you served for a minimum number of days before being discharged for a hardship or reduction in force. If you're a National Guard member, you served during or after August 1990 for at least 90 days of active duty, or you served before August 1990 for at least 90 days of active duty or 6 creditable years and were discharged honorably or placed on the retired list. Next, reserve member, your standard reserves. You served during or after August 1990 for at least 90 days of active duty, or you served before August 1990 or at least 90 days of active duty, or you served before August 1990 for 6 creditable years and were either honorably discharged, placed on the retired list, transferred to another element of the ready reserve, or continued to serve in the selected reserve. Last one here, eligible spouse. You're the surviving spouse of a veteran, or you're the spouse of a prisoner of war or a veteran who is missing in action. All right, moving on. If you don't meet the minimum service requirements above, you might be eligible if you were discharged for one of the following reasons. And they got 6 bullet points here. Hardship, convenience of the government after serving at least 20 months of a 2-year enlistment, early out after receiving or after serving at least 21 months of a 2-year enlistment, reduction in force, certain medical conditions, service-connected disability. Moves on to say more than 400,000 VA loans totaling more than $144 billion were issued by lenders in 2023, according to the Department of Veterans Affairs. Purchase loans represented nearly 80% at almost $120 billion, with an average loan amount of $372,886. Refinances came in at just over 19% and just over $25 billion, with an average of $312,981. The total, again, comes to the $400,692, with $144.6 billion, with an average loan of $360,863. How do you get a certificate of eligibility, you may ask? All VA borrowers are required to have a COE, Certificate of Eligibility. Although it's wise to confirm your eligibility before shopping for a lender or a home, your lender can help you obtain your certificate at any point during the loan process. There's a quotation here. You don't need to have this certificate in hand to start the VA loan process or get pre-approval, but you'll need it before closing the loan, said Chris Burke, an executive at one of the lenders. So if you're a veteran, you must provide a copy of your discharge or separation papers. If you're a current service member, you must request a statement of service from your commander, adjutant, or personnel officer that includes the following information: your name, social security number, date of birth, entry date of duty, duration of any lost time, name of officer verifying service. And if you're the surviving spouse of a veteran, you must provide a copy of the veteran's discharge papers and submit a request for determination of loan guarantee eligibility, unmarried surviving spouses form. If you aren't receiving DIC, that is dependency indemnity compensation, you must provide an application for DIC, a copy of your marriage license, and a copy of the veteran's death certificate. Once you have the verification paperwork required to get your COE, you can officially request it in one of the following ways. There's 3 bullets here. Online through the Department of Veterans Affairs. I've done that myself. It's pretty easy. Through your lender during the VA loan application process, which I've also done in my life, and that is also extremely easy. And red flag, if your lender who says that they can do a VA loan for you says, I can't get it. I don't know how. You need to get it. That's probably a red flag that they don't really know that much about the VA loan process or how to do VA loans. Third bullet, by mailing using a request for certificate of eligibility form, mail requests obviously would take longer. So other VA requirements, getting a COE, again, that's the certification of eligibility, is the most important hurdle to clear to verify your VA loan eligibility, but it is not the only one. You must also meet the following guidelines. Residency, you must occupy the home within 60 days of closing on the loan unless you're currently deployed, and intend to live in it as your primary residence. This means you can't use the VA loan to buy an investment property solely based as an investment property, to purchase it that way. A clear CAVERS report. The VA requires lenders to perform CAVERS inquiry on all prospective VA borrowers. CAVERS is a computer system that allows lenders to see whether you've previously defaulted on a federal loan, like a student loan or government-backed mortgage. If your CAVERS inquiry indicates that you're currently delinquent or have a recent foreclosure, you may not qualify for a VA mortgage. Typically, if you don't have anything like that in the past 2 years, typically with the VA loan, you're going to be okay. But don't guess. Reach out to a lender. Again, if you have questions, you can reach out to David Piatek. I'll put his information in the description. There's a couple questions here. Did you know the VA used to impose loan limits on their mortgages? It guaranteed, which meant you were limited to the purchasing power for homes under the certain value. So in other words, if you were living in California and you tried to use a VA loan, let's say it might have been 3 years ago or so. So if you tried to buy a house in 2020, maybe your maximum was about $800,000. That was it. You could not use a VA loan at 100% value over $800,000-ish. Now that is gone. So it's if you can qualify for it, you're good. So let's see what they say. Oh, look at that. As of 2020, VA loans no longer have loan limits, but keep in mind that your lender might limit the amount you can borrow. If that happens, you might explore jumbo loans. Moving on, insight from a VA borrower, U.S. Army veteran Joel Vaughn has used his VA home loan benefit twice, initially in 2017 and again in 2024, to buy a home in North Carolina. He said his experience getting a VA loan was nothing short of exceptional. The key benefits are no down payment, possibly a lower interest rate, and no private mortgage insurance, said Vaughn, who now works as a human resources director. I was always treated fairly. I never felt discriminated against, as the sellers have loved when I used the VA home loan because we can close pretty close to 30 days. 5 VA home loan requirements is what this is going to go into now. And again, if you have any questions or concerns, reach out to a lender. You can reach out to David Piatek. Watch his channel as well. So the Department of Veterans Affairs sets eligibility metrics for the VA home loan product like any other qualifying eligibility information. So like qualifying for a COE, your certificate of eligibility, and requiring borrowers to live in the property they're purchasing. But lenders also have their own underwriting requirements, meaning that all lenders could be a little bit different. One could be a little more strict than the other, kind of like a battalion commander could set the stage. Then each of the company commanders can kind of make it a little more stringent if they want, and not all equally. So let's move on. It's also important to remember that being eligible for the benefit and being able to secure a VA home loan are two different things, said Burke. You'll also need to meet VA and lender guidelines related to your ability to repay the loan. Here are 5 key requirements to qualify for a VA home loan. All right, so number 1 is credit score. We all know credit score is important, but here they're saying 620 or higher on this specific website. I don't even think that's true. Okay, so even if your score is less than that, talk with the lender, because sometimes it's not going to be a factor. Obviously, the higher the score, the easier it is. But some lenders will have a lower score requirement. Moving on, number 2, debt to income ratio. Again, I think that this is very conservative. It says 41% or lower. I would tend to disagree, but who am I? Have a conversation. Your debt to income ratio is the total amount outgoing versus the amount that you have incoming as far as income is concerned. And so, I have seen people over 50% debt to income ratio. Again, it's going to be circumstantial. If you're talking about high numbers, you can typically have, if you're bringing in a lot of, let's say that you're bringing in $300,000, a year, and you have debts that are somewhat high, and so you're at a 50%, well, you still have a lot left over as disposable income. That's a lot different than somebody who's at $40,000 a year and using half of their money based on their gross income. Using half of it would be a lot different. So anyway, have a conversation with your lender. So I kind of disagree already with the first two. I think that that's really pigeonholing people into a specific mindset, that if they're below 620, you're not going to get approved. That's a lie. And 41% or lower for debt to income ratio, also a lie. That's both of those are not true, in my opinion. I mean, who am I, right? So moving on, number 3, down payment. It says none. True. Property standards must be safe, sound, and sanitary. Okay, so yeah, I mean, it can't be, a completely, for a standard type of I'm just going to buy a house or I'm going to refinance my house. You will have a VA appraisal done. It's a little more strict, and you will have a pest inspection, to make sure that your house is not falling apart from any sort of infestations as well. Number 5, income and employment. 2 years of employment, adequate income for your family size and area. All right, so it kind of gives some more information on each one of these, but I'm not going to jump into it because I don't really agree with those first ones anyway. So with that, we're going to end this with the VA loan funding fee. If you are not a disabled veteran, you will have to pay a VA funding fee. It's substantial. If you do have a disability rating with the VA, I mean, even if it's your ringing in the ears tonight is 10%, that fee is waived, which is substantial. So let's read into what they say here and see what they say. So it says VA loan funding fee. This one-time fee is due at closing and helps compensate for the lack of down payment and mortgage insurance on VA loans. It can either be paid in full, upfront, or financed as part of the loan. The amount of your funding fee depends on the size of the down payment and whether you've borrowed a VA loan before. You may qualify for funding fee exemption if one of the following situations applies to you. You have a service-connected disability that makes you eligible for compensation. You're a Purple Heart recipient on active duty, or you've received dependency and indemnity compensation as a surviving spouse. Okay, other closing costs, it's going to be generic here. I mean, it's just like other mortgages. There are some limitations to what can be charged, but just like other mortgages, VA has upfront closing costs that can be 2% to 6% of your loan amount. Common closing costs include fees such as origination fee, discount points, credit reports, appraisal, title fees, title insurance, recording, state and local taxes, hazard insurance, real estate taxes, and so on. It finishes off here. Certain costs like originations fees may be negotiable, while others aren't, like taxes. Additionally, the seller may cover up to a certain percentage of the loan as far as concessions are concerned, but their willingness to pay some of your closing costs depends on the market and their urgency to sell, right? Is it a buyer's market? Is it a seller's market? And so forth. So with that, just wanted to give you a quick highlight on the VA home loan. The bottom line is that if you are looking to potentially purchase anytime within the next year looking to refinance potentially if the rates move around a little bit more, if you're looking for a cash out refinance, any of those types of things, talk with an expert, get an idea of what you're looking at so you're prepared. You are in no way obligated to move forward with anybody. I throw out David's name because we have a rapport, we talk, he's a good person, and he wants to help vets, and he's a veteran. So, David Piatek, his information will be in the description. Reach out to him, ask him the questions you want. Get pre-approved with him. If it looks good, great, right? If you change your mind, fine. It's no big deal. So with that, thanks so much for watching. I appreciate you. Have a great one. And remember, if we don't take care of each other, something went wrong.